So on Bitcoin, we still continue to see pretty lackluster price action. Ever since kind of this dip and then this pop, it's kind of been settling in. As you guys know, I don't change my analysis no matter what unless the chart tells me to change it. What is the chart still saying? It's still saying we have support here and we have resistance here.
Bitcoin Zella stands out with its simplicity and clarity. We've crafted an experience that anyone can dive into, whether you're a crypto expert or just a new to the crypto world. Now guess who keeps his eye on us? The author of best-selling book Rich Dad Poor Dad, Robert Kiyosaki. And we want to take this opportunity and thank all the people who trusted us, and we read every comment. And the best part, it's free. Subscribing now means you will get all new information for free. Don't just follow the trends, stay ahead of them. Subscribe to Bitcoin Zella today and enjoy the new edge. Gareth Soloway shares expert crypto insights and discusses blockchain evolution, market dynamics, and innovative trends. In this video, we cover his outlook. Let's watch to explore these ideas.
Bitcoin. Let's go over to the big board, shake it up a little bit here. So on Bitcoin, we still continue to see pretty lackluster price action. Ever since kind of this dip and then this pop, it's kind of been settling in. As you guys know, I don't change my analysis no matter what unless the chart tells me to change it. What is the chart still saying? It's still saying we have support here and we have resistance here. Okay, if we come down here, you would expect some sort of bounce around 73,000, give or take. If it confirms below, now the door opens for a bigger drop. But right now, 73 is the support level. Resistance remains right here. You can see we even closed above it on that great news on Sunday. Again, I told you guys on that Monday that there was a reason that Trump released that news about the strategic reserve on a Sunday because all the other markets were closed. So it focused the most focus on Bitcoin, that it could. The kicker here, though, is think about this, is how many people jumped long up here because of that hype and that pop. And if it had been done during market hours, would it have been a smaller pop and then people might not have lost so much money as it came back in? Neither here nor there. It is what it is, as I always say. But the point being is that you have all your resistance at 92 and your support at 73. Unless we confirm below 73 or above 92, this is a range-bound price action, even with Michael Saylor continuing to buy Bitcoin.
Representatives of President Trump's family reportedly held discussions with Binance about acquiring a stake in the crypto exchange. In 2024, Binance reached out to the Trump family as part of a plan to resume Binance U.S. operations in the United States. Sources indicate that Binance's billionaire founder Changpeng Zhao is pushing for a pardon from the Trump administration, raising questions about whether the deal would depend on such a pardon. Another possibility is for the Trump family to participate through World Liberty Financial, a Trump-backed crypto venture launched in September 2024. Trump, who has positioned himself as the first U.S. crypto president with his official Trump memecoin, along with efforts from his wife Melania and son Eric, continues to advocate for crypto adoption. Despite the report, Binance has not commented. The development adds to ongoing debates around crypto investments and regulatory challenges, keeping market watchers intrigued and eager for further updates.
The PPI numbers confirming yesterday's CPI data coming in lower than expected. And remember, lower than expected means lower inflation, so that's good, or at least less than expected inflation. So what we have today is PPI year over year. That's Producer Price Index year over year coming in at 3.2%. It was expected to be 3.3%. PPI month over month, 0.0%, much better than expected. Forecast had been 0.3%. So again, overall, this is good news that inflation is starting to kind of stall out from its push up, at least for this month. The problem again remains, and why the markets are up only a little bit off of this data, is that we don't know what the impact of tariffs will be yet on inflation data next month. And again, generally, this is probably not including any of the tariffs yet, so we have to watch that for next month. And I think that's what the market will hold its breath for going into next week now, or next month. Now, a couple things to go over here. Number one, we have the S&P, which did bounce a little bit yesterday. Yesterday in the morning video or in the morning game plan, we talked about how the S&P is at support. You can see this secondary trend line that I found as well from this pivot low right here through the low here in August, coming right up to this level right there, right? So again, you can see again right there, that trend line coming through here, and that gives us a basis as well. In addition, remember yesterday I showed you the parallel. If you connect the high here to the high right there, it's a slight upsloping trend line, which then if you expand out, it connects perfectly through this area too. So this is basically a parallel here. And so again, it gives us a technical reason why the market should bounce, not just, oh, it's oversold or we think it's oversold, but more so, okay, there are some levels here that the market is going to try to hold based on technical analysis, all right? But again, the question is, how long does it hold? You know, if the trade wars get worse, and I'm hearing every day, you know, a new threat of 200% tariffs on Europe in retaliation for this or that, it's ultimately the straws that are breaking the camel's back, if you will, in terms of psychology for investors, right? Investors get tired. One of the big principles of investing is that the market and investors can handle bad news and they can handle good news. What they can't handle is uncertainty. Uncertainty because you can't price out a model for how much should we pay for this stock in terms of earnings per share or this stock when we don't have specifics. And so when things are always in flux, it ultimately kind of deteriorates the market psychology, and that's what we're continuing to go over. In addition, you throw out names like Walmart. We've seen the warning going on there. We just had Delta warn on earnings. There's definitely a slowdown, what I'm going to call, and I'm going to again talk about this more and more in the coming weeks, the reverse wealth effect. So again, if you remember, one of the reasons why the markets were just grinding higher and the economy was staying kind of abnormally strong for such a long period of time was that as the markets went up, and I explained to this many, many times, is that people are sitting there and saying, oh, wow, my 401k is up another 5% this month or this quarter. I guess I can go buy that new TV, or I can go buy a new car, or I can go take a vacation. Well, now we're getting into this point where since December, we haven't seen that. So people are looking at their statements and they're saying, wow, I'm flat, or now I'm down. It's the reverse wealth effect. And so they're going to start to pull back on spending even more ferociously. And that, again, will cause an issue.
Bitcoin ETF inflows seem promising, yet maybe a false dawn before a price correction. Recently, Bitcoin Spot ETF recorded a net inflow of $13.33 million on March 12, suggesting renewed interest from institutional investors. However, despite these inflows, analysts caution that a key resistance barrier around $95,000 could trigger a sharp reversal. Notably, while Bitcoin ETF shows strength with a cumulative net inflow of $35.42 billion since inception, Ethereum Spot ETF have struggled, posting net outflows of $10.40 million for the sixth consecutive day. Institutional trends are mixed. ARK21 shares Bitcoin ETF led the way with $82.60 million in inflows. BlackRock's shares Bitcoin ETF and Grayscale's GBTC ETF experienced significant outflows, indicating a cautious approach. At the $95,000 level, 1.2 million investors hold a total of 726,000 BTC, a substantial hurdle that could influence market behavior. Recent market turbulence has also added to the uncertainty. Following a sharp stock market downturn amid global trade tensions, Bitcoin dipped below $77,000 before rebounding to near $83,000. Technical indicators, including the Relative Strength Index and Bollinger Bands, point to potential vulnerability despite the rally. Analyst Ali Martinez suggests that if global liquidity continues to expand, Bitcoin might surge by mid-April. However, overcoming the resistance at $95,000 will be critical, as it may either confirm a bullish breakout or lead to a notable correction. Bitcoin's price dropped by approximately 2% recently, as falling inflation numbers unexpectedly fueled fears over an escalating U.S. trade war. Lower inflation figures, which normally would boost market sentiment, instead dampened risk asset trader appetite. Data from Cointelegraph Markets Pro and TradingView showed Bitcoin trading around $81,500, despite the positive economic signals from both the CPI and PPI reports. These lower-than-expected figures have not generated the usual rally, as investors worry that persistent trade tensions may prolong market uncertainty. The cooling inflation has also stalled any significant rebound in the U.S. dollar index, contributing to the overall cautious mood in the market. Some analysts believe that these mixed signals give President Trump further reasons to maintain his current stance, leading to a volatile trading environment. With geopolitical risks still high, traders are advised to brace themselves for continued market swings and potential further price corrections. Stay extra alert as volatility persists. If you've been with us so far, a big thank you. Don't forget to subscribe for free to Bitcoin Zella for your daily news. The link is waiting below. That's all for today's crypto news. Stick around for more updates, insights, and analysis on cryptocurrencies. Share your thoughts in the comments, like this video, and subscribe for more exciting content.